Pardede as a senior partner and co-founder of Critical Consulting.
Thank you, and good morning to all of you, ladies and gentlemen. It is my pleasure for me to come to this event. I think this is a very important event from my point of view, and my colleague from BKPM, Pak Indra, already present to you about Indonesia from the government point of view. Of course, I'd like to provide you analysis of Indonesian economy from the independent observer. This is the topic of my presentation, is a macroeconomic update. At the end of my presentation, I will also argue the importance of M&A in Indonesia, what kind of value added that you can add to Indonesian economy. But, okay, this is the outline. I will first discuss about the global risk factors and what is the impact to Indonesia. And second, I will update the recent economic development, and including I will also discuss the risk and challenge, especially the possibility of overheating in Indonesia and infrastructure problem, although my colleague from the BKPM already discussed about the infrastructure. But especially I will discuss a bit about the balance of payment. This is a real challenge that Indonesia will face in the near term. And then I will make some summary conclusion. Before that, of course, I will discuss a bit why the M&A is very important for Indonesia. This is the key external factors that Indonesia will face. Like it or not, we see now development in the Middle East, in Eurozones, and then in US and China. I mean, in the Middle East, risk to Indonesia is what is the possibility of oil price spike. Of course, Indonesia will affect it, especially the fuel subsidy. The fuel subsidy will rise significantly if we see some oil price spike in Indonesia, and could be a shock to the business confidence as well. In the Eurozone, of course, all of us already bombarded by a lot of information about the Eurozone. But according to my information and my analysis, I think the euro could take quite some time. It could be 2, 3, even 5 years before the euro recover. And the US economy, of course, you know the information about this one also, is weak and could be prolonged the recovery. Despite recently the Federal Reserve already have the QE3. I mean, you already have a QE1, a QE2, and then QE3. This is quantitative easing. But I don't see any significant impact to the real economy yet because of the QE is basically, it's just like a Panadol. It's not really solve the problem in the real sector. Similarly, in the Eurozone, I mean, they try to also ease and also to guarantee the government debt. But all of this policy, in my view, is just a temporary solution. It's not really solve the real problem in those countries. And of course, China. China is continued to be unpredictable. The question about China, whether going to the soft landing or the hard landing. Of course, we prepare a soft landing. If it is hard landing, will affect the whole world. It's not only Indonesia, but the whole world. Because China is number 2 in the world right now. This is the only engine that we have that's supposed to be a solution for recovery in the world. But if China is face difficulties, and you know that China is sometimes unpredictable, even when Xi Jinping, the next leader of the country, disappear for 1 month, we don't know where he is. So these kind of things that could be affected whether China will also prosper in the near future. China is a very important one for everybody, especially for Indonesia as well. So this is a real risk that Indonesia will face. If all this in the Middle East, Eurozone, US and China collapse at the same time, even if all this region is weakening, certainly Indonesian economy will affect it as well. Indonesia will weaken. And this is This is a World Bank economic growth scenario because the World Bank already made this scenario, so I don't need to repeat it again. It's basically, there are three scenarios from the World Bank economic scenario about Indonesia. First of all is, what if hard landing in the BRICS, Brazil, Russia, India, China, especially China. And at the same time, we experience a severe global slowdown, meaning the economy in Europe as well as in US is really collapsing. Then what is the impact to Indonesian economy? And the second scenario, look at the less severe impact here. The second one is basically, it is return to our experience in 2009. So the global growth slowed down, but at the same time we see some recovery in large emerging economy like China, especially China and India and Brazil. And we call it as a soft landing for BRICS. Soft landing, for example, for China is 7.5% growth to 8% growth. Hard landing meaning is 7%, even less than 7%. And then the third scenario will be continuing turmoil. So the turmoil, like what we have right now, continuing up and down in the financial market, and growth slowdown in US and Europe. It's not collapsing, but growth slowdown in Europe. And the commodity price also is not collapsing, but decline moderately. Whereas in the first scenario, collapse, the commodity price is collapsing. So what is the impact to Indonesian economy? So based on the World Bank scenario here, the baseline, which is continuing turmoil, Indonesian growth will be 6% in this year, and next year 6.4%. This is the baseline scenario, is only continuing turmoil. But of course, if return to the 2009 scenario, then Indonesia will grow around 4.7% next year. But if we go a severe global slowdown and also the collapsing of the BRICS as well, then Indonesian GDP growth will be 3.8%. And investment to GDP, of course, is still the same, 26.1% decline for the next year, and if the worst case scenario will be even more decline. In my view, the possibility, the high possibility right now, I just put the percentage here. The first scenario is the baseline scenario. The possibility now, the probability will be around 30% nowadays, because my predictions that Europe and US is really going now to the difficult situation, and it takes probably 2 to 3 years for them to recover. So the possible scenario, I put 60% in this scenario number 2, and then 10% in scenario number 3. I don't think the global will be collapsing, the global economy collapsing. With this, then Indonesian growth, this is the most likely scenario from my point of view, given the current situation, will be 4.7 to 5.3%. So 4.7 to, which is, that's kind of growth that we have in 2009, basically. In 2009, Indonesia grew by around 4.8%. Whether this is good or bad for Indonesian economy, of course, it's not good at all. Because Indonesia needs to grow 7% per annum in order to create enough formal jobs for Indonesia. But whether this is bad for the comparable to the whole world, it's not bad. Because other countries could be worse than Indonesia. And I will explain to you why this is my argument about this one. Now, the Indonesian economic outlook. Internal economy, so far so good. Although, as I mentioned to you, global economy eventually will put pressure to our export and already put pressure to our export. The domestic engine continued to propel strongly as the middle income group continued to rising. Meanwhile, external engine has lost its power due to the weak global economy. So we have internal engine and external engine. The external engine now having problem. We know all of these ones. So now our economy, thanks because of the rise of the middle income group in Indonesia significantly, so the domestic engine actually that play a significant role pushing Indonesian economy growth. This is the number is basically. In Q2, in the second quarter of this year, Indonesia even accelerated its growth. In the first quarter, Indonesian economy only 6.3%. In the second quarter, even become 6.4%. Probably Indonesia is the only country in the world among the big countries. I don't really study the small country, just to make a comparison, that have acceleration of the growth, 6.4% growth. Of course, you cannot compare in terms of growth compared to China. China is faster than Indonesia, but they are declining. They are decelerating in terms of growth. And again, what explains the Indonesian growth? The main explanation for Indonesian growth now is investment. Investment is a main driver of growth. So my previous presenter, Mr. Indra, already explained to you, yes, indeed. We applaud this agency that already promote our investment. And clearly, if you just look at all the number here, over the last 3 quarters in a row, investment grew more than 10%. This is the first time in the history of Indonesia, of course, after 97, 98. Before that, in 93 to 95 to 96, our investment grew more than 10%. And now we are returned back to the same level of growth. So investment and consumption also remain strong. But as you see from the number here, if you just look at the blue bar there, export deteriorate. And this is the number from the investment board promotions. The FDI remain robust. I think Pa Indra already explained to you what is the reason. And look at all the number. Here, I think it could be, the realization of investment could be above the target that they already promised. And again, this is also explained as well in Indonesia, whether Indonesia will overheating or not. If you just look at because of investment growing rapidly, and especially foreign direct investment, and then the capital goods and raw material import continue to rise. Look at the red line there. So our import of raw material continue to rise. At the same time, import of capital goods continue to rise. So this is in line with the when foreign direct investment coming. And we see also at the same times in gross fixed capital formation, a growing import of machinery and equipment. So as long as we continue to have a strong FDI, then our import will continue to rise. So meaning what? Our trade balance will deteriorate because on the export side, we are relying more on the commodities. But whether this is good or not, let me discuss later on about this one. So clearly here, our expansions of the gross fixed capital formation, this is the gross fixed capital formation, meaning the component of investment in Indonesia. You can have building, and then foreign transportation, foreign machinery and equipment. Basically, if you just look at the number over here, look at the bar chart, and the blue bar is foreign transportation and also foreign machinery and equipment. And at the same time, we see a significant consumption growth in cement, in line, of course, again, with the strong investment growth. And at the same time, bank credit grow at a rapid pace, especially credit and working capital. Whereas if you just look at the number, if you look at the line, which is the green line, is the consumption growth already declined. So If we just follow what I already explained to you, indeed the GDP growth increasing, which is supporting by investment. And all the number, all the evidence here support that indeed the foreign direct investment is very strong, supported also by our import in foreign machinery and also foreign transportation, and also in line with this one is the credit growth in working capital and credit investment also strong. Now, of course, strong car sales and at the same time weak motorcycle sales. Strong car sales, this is related to a rise of the middle class, middle and upper income group in Indonesia, despite the Bank Indonesia already introduced so-called the loan-to-value ratio. It's not affected the middle and upper income group because basically the upper and middle income group, they just buy mostly cash, not using a credit from a bank. Now I move to the recent challenge in Indonesia. Whether overheating risk a concern for Indonesia or not, I think this is a very valid question because when you grow more than 6%, at the same time you look at our trade deficit later on is deteriorate, whether this is a reflection of the possibility of overheating risk. In my view, still a concern in the medium term, but not in the short term. So I don't see a problem in the short term. Why is that? If you just look at the inflation and the component of inflation, the core inflation as well as the volatile inflation, still very much under control, will be less than 5%. Given these ones, as I explained to you before, basically our economy now is driven by, not by consumption, but very much by investment. And the capital goods that actually is increasing rapidly, the import of the capital goods, is not the consumption goods. It is the importation of the capital goods that rise rapidly. This is why I don't see any possibility or potential overheating in the short term. At the same time, the central bank already take a precautionary regulation, as I mentioned to you before, the loan-to-value ratio. Also, they increased the down payment. Also, there is some regulations, additional regulation for credit card. The government bond and interest rate increase, and incrementally the rupiah also feeling the pressure. We already see the rupiah is weakening over the last, 6 months. Of course, over the last 2 days, we see the rupiah start to rebound. But this is very much, we have to look at the balance of payment later. I will discuss about the balance of payment later, and we can see where is the rupiah goes over the next 6 months, over the next 1 year. Now, infrastructure challenge. I think my colleague from the government already mentioned about the infrastructure. I could say the slow progress in the infrastructure development. We can promise. I'm part of this one. This basically, I'm the chairman of this infrastructure financing in 2004, and we promised many things. But I have to admit, the real progress is very slow. So the real progress remains uncertain. And samo. The same old, we make the same argument from time to time. And the issues that hindering infrastructure development still the same, basically. I can put a number of lists here. Look at the list, it's very long list. And still we face the same problem like what we see in 8 or 10 years ago. So we haven't really addressed this one. This is real challenge for my colleague for Bapepam, BKPM as well. Oops. Now, but at the same time, I have to say there are some progress. Soekarno-Hatta, Jakarta Airport now, Bali Airport, the Medan Airport is start to develop now. At the same time, of course, there are some progress in the railway service. So there are some progress. Also, I have to say, some big private sector take initiative to make some progress because the big corporate which is facing the public infrastructure constraint, they cannot just wait for the government. While at the same time, of course, these big corporates enjoy a high margin from their business. So they build their own infrastructure. I mean, a big palm oil industry built their own infrastructure. A big coal industry built their own infrastructure. It is good somehow. Those infrastructure could benefit SMEs surrounding them. But if it is far away, the SME and household, then they are actually the problem. They have no access to the public infrastructure. Of course, this might not a vision, but still much better than nothing. The third risk, the challenge, if I could say, that Indonesia is facing right now is a balance of payment. Our balance of payment in the negative territory is mainly due to the current account. Current account is basically the trade account. The main problem is the global weakening affected our commodity price. And a significant portion of our export is coming from the commodity. And because of this, we experience a weakening in our export. At the same time, foreign direct investment is very strong. But foreign direct investment meaning in order to satisfy the foreign direct investment, then you need to import the capital goods and also raw material. So we have a strong import and weakening of our export. Can we reduce our import or not in order to balance our trade account? No. Because our import, our strong import, is simply driven by our investment. So you cannot do nothing about your import in this case. At the same time, your export, it is beyond your control. You cannot control export because our export is very much depend on the global conditions. So this is actually the main challenge the Indonesian facing right now. Look at the number here. Look at the blue bar is a current account continue to deficit. At the same time, the financial account, luckily, fortunately, our financial account, especially for foreign direct investment, is kind of compensate the weakening of our current account. And this is due to the commodity price. I think coal, natural gas, palm oil, and all the commodities is basically declined, the percentage. But despite of these ones, despite the commodity price is declined, but the margin is still thick. I can argue, for example, for, let's say, the palm oil. The price of a palm oil now is around $1,000 per ton. Before, of course, could be $1,300 per ton. It is declined. But you know, the cost of goods sold of the CPO in Indonesia, crude palm oil in Indonesia, only around $400 per ton. So the margin is still there, thick. Whether it is affected, it is affected. The profit margin is declined. But I don't see affected the whole industry yet. So what is the options? This is the policy option. Of course, the easiest one and also the most difficult one is to maintain strong FDI. Hence address the problem of the infrastructure, logistic, both in the hard and soft infrastructure. Clarify rules and law, and also the law enforcement is very important. Make the bureaucracy more effective. And resolve the land issue and also the labor market. We know all of these ones. But I don't think easy to do this one, and almost difficult to do in the short term. So why the FDI remains strong in Indonesia? The argument, I think, is already explained very well by my colleague from BKPM, which is because of the large domestic demand, a significant large number of the middle class in Indonesia. And the second one, high return on equity and high return on investments. There's no magic about that one. I continue to look at, to compare the return on equity and return on investment in Indonesia compared to other regions. Indonesia among the highest. So, the magic there. And relatively stable political environment. Of course, we have some problem, as I mentioned to you, in the key policy that's supposed to be to maintain strong FDI, but still have an attractiveness for Indonesia because of these at least three reasons. Are there any other policy to resolve the problem in our balance of payment? Yes. What about the postponing mining export tax policy? Is it possible? I don't know. But this is against nationalist constituent. Might not be easy to resolve these ones. How about adjusting the fuel price? Because part of our problem in our import, I think, especially for fuel and oil, is above our consumption in Indonesia, because when we subsidize fuel, of course, we consume more than supposed to be, and at the same time, the smuggling is just in the border of Indonesia. It's continued to rising. Can we adjust the fuel price? If we can adjust it, it will be affected our import, which will reduce our trade balance. I don't think possible in this year. By law, Indonesia cannot do it this year, unless the price of oil is go to the roof. Then Indonesia can do it. But maybe next year. But again, this is depend on how the leader taking lead. Do he or she have, or here, not she, have a courage to confront the politician about this, and this is very important. But the last resort could be, if all of the above have not taken by the government, then the BI might take a different policy, which will affect all sector. No discriminatory. All sector will be affected. Of course, the BI already introduced the loan to value ratio, and then they may target some sector credit. But at the end, if this one is still cannot resolve the problem of balance of payment, then BI may take the tight monetary policy, which can be reserve requirement increase, and interest rate basically will be increased, which affected the whole investment environment in Indonesia. I mean, the rupiah now, if it hit the 10,000, will create panic. And similar way, the easiest one to look at, if our reserve is less than 100 billion, I think will create something as well. So you just look at whether the rupiah is start to hit 10,000, or the reserve, the foreign reserve hit 100 billion, then will be create something in the market as well. But again, up to now, so far, so good. Yeah, so far, so good. We see a flow of portfolio investment recently over the last 2 days after the QE3. But the question whether this will be sustainable or not, this is a real question. I never believe that portfolio investment will be sustainable. Yeah? Come and go. So we have to rely on the foreign direct investment. This is why my friend from the BKPM is very important. Now I just discussed to you the prospect of merger and acquisition in Indonesia. My argument first is we see a significant or large productivity gap in most of the sector in Indonesia. In retail sector, manufacturing, telecommunication, agriculture, just all the sectors basically. I mean, if you compare to Malaysia, South Korea, and Singapore, even compared to Malaysia, on average, our productivity in all these sectors much, much lower. So Indonesian productivity will be only 1/3 of productivity in Malaysia. Meaning what? This is actually the opportunity. With a light touch, you can just tweak technology and processes, business processes, then you can gain a significant productivity. That's my main argument why the M&A is very prosperous in Indonesia. The second one is basically most of the business in Indonesia are small and medium enterprise, at the same time growing rapidly. Nominal growth on average is 15%. But however, many business entities grew more than 20%. In order to maintain this rapid growth, those small and mid enterprise require additional capital, additional technology, and new business process. Meanwhile, at the same time, their access to capital and new technology are limited. This is an opportunity for M&A. Of course, the M&A can only play a significant role if you can provide, or you investor can add value by add more capital, add new technology, and add new processes. So the prospect of M&A is really very bright in Indonesia. This is my last slide. So the conclusion, the global economy is certainly weakening, and there is no clear timetable when to recover. Second, Indonesian economy continues to grow comfortably due to the varying increasing large domestic engine, despite the external engine facing some difficulties. Number three, overheating is not a concern, as BI, Bank Indonesia, already taking some precautionary measures. Slow progress in infrastructure and logistic development certainly constrain further development of the economy and hamper productivity improvement. Balance of payment is the main challenge in the short term, with the likelihood, if the government can do nothing about that, that the BI may respond with the tight monetary policy. Last but not least, the prospect of M&A in Indonesia still largely open. Thank you very much.
And next, ladies and gentlemen, we will hear the next presentation